All right, everybody, welcome to another Trust Engine Mortgage Coach. I don't want to call it a top producer interview. Let's just call this innovators interview. While we do have a top producing mortgage professional on today's call, he's gone from I'm a top producing mortgage professional to a culture building, top producing head of production for Fulton Bank. Brian, welcome to the call, brother.
Hey, Dave, how are you?
Good. I'm looking forward to another interview. I've had a lot of great conversations. Can't wait for this one.
Absolutely.
And then we have his coach, an industry coach, one of the founders of Rewire, a really incredible coaching organization that doesn't just provide accountability. I mean, I think anytime there's a leadership relationship, there's accountability implied, but they're about rewiring your mind, like literally helping you build new skills and habits, from the bottom up, like from the brain out. What's up, Mr. Abell?
Dave, happy to be with you again, my friend. Brian, good to see you. Good to hang out with you guys in the virtual world today.
Yeah, and you guys live pretty close together, right? In Baltimore area?
We were both in Maryland. There was a day long time ago where Brian and I were competitors. Friendly competitors, of course, but competitors.
Of course. Nice. Well, it's great. How long have you had a coaching relationship with Brian, Jason?
2017?
Gosh, Brian, I'll let you answer that. Yes, 2016, 2017. I think when you took over some additional roles, you gave me a call.
I think it's a quick story, and I think it's very relevant to what we'll talk about today. But I moved from a top producing loan officer to a regional sales manager. This was 2017, so I had a 2-year-old and a 4-year-old. Market was relatively robust back then, and I would go home every day and I had no idea what I was doing. I had no idea what I was at work, no idea what I was doing at life. And I had great leadership at the bank that was helping support me, but I just needed to get my life professionally and personally in order. And I had heard Jason speak at one or two different things. We connected, one thing led to the next. And here we are 6 years later, and every 2 weeks, Jason and I chatting.
Yeah, well, that's one of the things that led to this call. I can't remember if, Jason, you interviewed me for your podcast, I think, or I interviewed you, but we had a conversation, and we were just talking about how the industry needs to change. Loan officers need to become more than loan officers, and this call is about trusted advisor. They need to really be trusted advisors. Like, being a loan officer is not where it's at going forward in the industry. I just spoke at Housing Wire, and one of the analogies that came up in multiple conversation is that just about everybody in mortgage and real estate has been running downhill for their entire careers. Rates have just been going down. It's been like a downhill run, and everybody in the industry is a good downhill runner. But it's an uphill market, and rates are never going to go to 2 or 3% again. So it's like, we got to be uphill runners. There's like new skills that sales organizations need to have. There's cultures they need to have, and it's a trusted advisor culture. And we had just both kind of landed on how Brian Morley is like a case study of someone that made that transition personally, and then has built a culture, like an entire organization of trusted advisors. Did I say that the way you kind of see it, James or Jason?
Yes, but I'm going to add a bunch of different caveats. So Brian tells that story of when he initially reached out to me, and I'll say a couple things. First of all, about coaching, but then about Brian, and then specifically, hitting on what you're talking about, Dave. So first of all, Brian was running, even in that time frame that he called me, he was running uphill. He was producing a ton of business. He was leading a great team. And then he took on additional responsibilities at his organization. And with that, and like you said, Brian, with 2 small children at home, man, things just get crazy. I don't care how good you are, but when you put enough things on even a very high level, high producing person's plate, things just spill off the plate. And, we did work on, first of all, getting a read on where Brian was, but then also looking at changing some thinking. And one thing that I will say about Brian and anybody that gets involved in coaching is that they're the person in the ring. You know, I'm in Brian's corner. I'm still in Brian's corner, but Brian's the one taking the punches, giving the punches, going from a posture of being on the balls of his feet versus, you know, the heels of his feet. And I just want to give kudos to him for that, because even though he was running uphill at the time, he has, you know, kind of crested, so to speak, and is running downhill from a leadership standpoint. I know the market has a lot of people, you know, on their heels, and like you said, Dave, going from this posture of, you know, kind of order taking or running downhill, everything is easy, to like the opposite of that right now. But I will say, from a leadership standpoint, even with everything that's happening in the market right now, there are people, and Brian is a perfect example of that, that are going, no, we're going to lean in. We're going to lean into culture. We're going to lean into crucial conversations. And that's where some of your terms come into play, Dave, with being a trusted advisor. We're going to lean into doing the right thing for the people in the industry and our clients and our referral partners. And I would say that all of those things go together, like having the willingness to be in the ring, having the willingness to get others to help, whether that is others in the industry, mentors, organizations like Rewire, technology like your Trust Engine. It all goes together. So yes to everything that you said, with those few caveats.
So Brian, I want to bring you into this and ask you some questions, and then let's really unpack how to create a culture of trusted advisors. So first of all, how many total loan officers, you know, on your, you know, that you lead at Fulton Bank? Like, what's a ballpark on the number of loan officers?
So we've been anywhere from 95 to 120. I think last count we're at about 115 in 5 states plus DC as of today.
And how many loans are you closing on average per month in this market as a company?
Oh, you know, probably doing a little math here, probably 250 to 350 a month, just depending on where we are, seasonality, et cetera.
Okay, so solid, you know, in this market. I mean, that at 350, that puts you at about 3 loans per loan officer per month, which is a great, you know, efficiency mark in this market. I mean, there's a lot of folks at 1 point whatever, and you know, the industry average, at least as we track it, is let me see if I have that number. No, I don't have that number off the top of my head, but it's in the ones. So that's a great efficiency. And then you still produce, right? I mean, you're still closing.
Yeah, on a limited basis. Yeah, on a limited basis. And, you know, I think that makes me a better leader, to know what button to push, to know what challenges we're facing, to know how to have those crucial conversations with customers, referral partners, and, you know, more so the technology. You know, how can we embrace what we have to be better servants to our customers and to the bank? And how can we leverage all that we have to produce the best output for our customers and the bank?
Yeah, well, you do a great job. And then I'm looking at your leaderboard on MMI. Pat Casey has become, at least today on MMI, he's the number 2 loan officer at 75 million in production. And how long, I mean, how long has he been a full-time loan officer?
He started fall of 2019, if I recall.
Yeah, I say 2020. Like, I mean, like, maybe he technically started 19, but guys, that's pretty incredible. And you mentored him to do that. So let's first of all, I want both of you to define this, but let's start with you, Brian. What is a trusted advisor? You know, we're like, well, let's build a culture of these people. Describe that the characteristics and skills of a trusted advisor. Let's just unpack this real quick.
Yeah, and I think that, you know, you two were both very kind in describing some of the work that we've done and I've done. But I think a lot of it comes from who you work for and the people that you work with. And, you know, at Fulton Bank, we have a very strong culture. And 2 of the pieces that come out when we talk about culture are, you know, trusted advisor and coaching. So regardless of the line of business of the bank, but specifically for me in mortgage, we require all of our leaders to coach. A lot of them are player coaches, but we require them to meet with their teams, understand what's going on, and get kind of a 360 view of the individual. Not, how are you doing on your TPS reports or whatever, and what are you doing on a day-to-day basis, but tell me what your challenges are. What are your struggles? And over the last 4 or 5 years, and just think of the roller coaster that we've been in the real estate market, because that's what we're in. We're loan officers, but we're in the real estate market, and everything that we've been through, and the personal and business life have blended so much that for us to be a good leader, to be a good coach, you need to understand your team, and you need to go into those relationships as much as your team will let you in. So that would be the first part, a strong culture of coaching. And then the other piece is, as I mentioned, we do have the concept of trusted advisor. So the bank views all of our frontline salespeople as trusted advisors. So even before we've engaged in this, that's what the bank has preached that we do and how we should be doing things. So partnership between some of our training group, leadership at the bank, leadership at the mortgage company. We said, okay, guys, we're not order takers. It's not 1-800 call Fulton Mortgage and I want a loan. It's how do you develop relationships? How do you talk to customers making perhaps their biggest financial decision and provide them the tools, provide them the resources, and provide them all the data so that they can make the decision and that they can leave that transaction feeling like we did the right thing and my Fulton Mortgage Company loan officer helped me make that decision. And it's the age-old saying, right? You want to create a raving fan so that anytime you talk to someone, well, Dave, anytime you're thinking of buying, building, or refinancing a home, please remember the great experience we had, and don't keep me private, share me with everyone. So that's ultimately the goal. And if we're doing that, we're creating a mutual benefit. We're helping our customers achieve their outcome while including them in the decision-making process, but then creating raving fans so we have more opportunities like that. So really, I think it's the culture of the organization that I work at has allowed us to be successful in this space.
So I'm gonna give a couple of comments, and then Jason, feel free to make yours. So first of all, I would put, coaching and training, as I interview some of the best and most successful loan officers and leaders, trusted advisors in this market, they're training. Like one of my top interviews this year is with Daniel Saw. And, not only is he personally going to close I think he said 370 loans, and he still has a shot at 400, but he manages a branch of 31 loan officers that averages, his branch of 31 loan officers is 8 loans a month. And they're the market leader in Columbus, Ohio. In that market, they actually took out Huntington Bank, which had historically been the #1 market leader. Rocket was always 2 or 3. And now it's Daniel Say's. And first thing he talked about is just training. Like we train all the time. And so coaching and training, I hear it all the time as a thing. And then advice, I want to unpack 3 things that I think are cornerstone to if you want to be an advisor versus a loan officer. One, you have to give consumers options. Like if you're just saying, hey, here's a fee worksheet and here's what I could do for you, that is not being a trusted advisor. You have to give options. You have to vision cast what it means over time. So not just, hey, family, this is your monthly payment, this is your interest rate. It's like, if it's not telling a longer picture, you're not really helping them over, what this means in 3 years, what this means in 15 years, and then strategies. So I know those 3 things are part of being a trusted advisor, but first of all, let us know if you agree with that. And then what else? What are the other skills that a trusted advisor needs to have? And then Jason, I'll have you come in and add your thoughts. But Brian, what's missing?
Yeah, I think the interpersonal skills to be able to relate with someone is incredibly important. And Dave, I think a lot of what you touched on is, in a way, what you deliver. But I think you need to be able to form relationships with individuals in order to get to that point, in order to win their trust, so that you can say, this is how I will help you. And think about where we've been over the last 3 or 4 years. What I think is really important, and what we've talked about, what our training department has helped us a lot with, is, you go back a lot, maybe half of those conversations were done face to face. Now maybe you meet, I don't know, 1 out of 15 people face to face. So you're doing a lot of phone calls, emails, Zooms, whatever. So how can you connect with a borrower or potential borrower if you're not sitting across the table? I remember I started my origination career in 2008. Great time to start in retail mortgage, of course, but I was at people's kitchen tables taking loan applications. I don't know if that happens anymore. But so how are you forming those relationships? How are you understanding what's important to your borrowers? How are you forming that bond so that they trust you, so that you can get to that next point, so that you can get to these are your solutions and this is how I'm going to deliver it. So we really focus a lot on that, a lot on listening, active listening, a lot on coaching around questions, how you can ask the right questions, how you can ask those open-ended questions so you can learn a lot more about your borrowers.
Such a good point. So guys, this Tuesday I had Dan Keller as our interview, along with a coach for real estate agents and a couple realtors were on the call. And it was like top strategies to help realtors get more listings. And the first 30 minutes, well, the first 10 to 15 minutes was kind of setting the table, getting to know everybody. But then, there was about a 30-minute period, and it was sales training. Like, it was role playing. It was hardcore training where someone who's super senior and super successful is listening to someone. And by the way, even 2 super senior successful people can role play back and forth and elevate each other. But they were role playing on calling expired listings, or no, calling FSBOs. That's what it was. It was FSBOs, and it was scripting on how realtors should call and get listings with for sale, get meetings with for sale by owners. So first of all, I want you guys to all take from that, like, one, you got to figure out, like, what is being a trusted advisor culture to you, document that, and it needs to go beyond the transaction. And to your point, Brian, relationship building, having great conversations with people so that you can give great deliverables, that has to be part of it. Jason, what are your thoughts on this, and anything you want to add, subtract, or anything you want to ask Brian?
Yeah, one thing first I want to underline is what Brian said about him remembering being at somebody's kitchen table and taking an application. Now, we kind of smile at that because, yeah, there was the handwritten, 1003 type of thing. But when I hear that, what I hear is a guy that genuinely cares about his clients enough to be at their kitchen table and look them in the eye and have a conversation and get answers to questions in that personal way. That's a trusted advisor to me. So I don't want to miss that point. I wrote down some words when you started to ask the question, Dave, about trusted advisor. And here's some of the words that I wrote down, earned, time, genuine care, homework, and relationships. And here's what I mean by some of those. Trust is earned. You don't walk in the door with trust, right? And trust is earned by going to the kitchen table, so to speak, and taking the application. Again, I know that doesn't happen anymore, but whatever today's version of that is, and doing it over time, it's not something that you just, walk in the door and you're trusted. It's conversations over time. It's relationships built over time, and trust is something that is earned. It's not given. And then the word care is something that I think about when you're a trusted advisor, you're likely somebody that genuinely cares about the person that you're advising, not just like, oh, it's a commodity, it's a number, it's another loan type of thing. No. It's somebody who's looking to buy a home, and home is where really happy things happen, where sometimes sad things happen, where safety happens. And when you genuinely care about people, I think that's a real important quality of being a trusted advisor. Sometimes we'll get asked the question, hey, what's a script that shows that I care? And we always laugh. We're like, no. If you need a script for that, you're missing the entire point. You either care or you don't care. And then the other thing is, boy, you better know your stuff and you better know your numbers. That's a ticket to the game. Like the people that are doing their homework at night and knowing not only what the rates are, but why the rates are that way, knowing where the gaps might be in the industry that your particular company's program might be able to fill that gap, and doing that homework and knowing that cold. I think knowing your numbers and knowing your stuff is part of being a trusted advisor. And then the last thing is just being coachable. You know, Brian is somebody that is, I mean, he's a leader in the industry. And yet he's the guy taking notes at the workshop. He's the guy that is talking to people like me from a coaching standpoint. I know him well enough to know that he's got different mentors, you know, in the industry that he's rubbing shoulders with. And so, gosh, trusted advisor, I don't know. Those are, I don't know, 8 or 9 other words that I wrote down, but I think there's a lot that goes into it. But it goes back to, are you willing to be the person? And again, I know this doesn't exist anymore as much as when Brian started in the industry, but are you the person that is willing to be at the kitchen table?
So, yeah, no, such good points. So Brian, I want to get a little tactical, you know, as we get into this. I mean, I think we've gone high level. We've talked about some, you know, just call it big things that people need to know how to do. You know, obviously you have incredible adoption of MortgageCoach. You use it. A number of your other top producers use it. You train on it. And let's just call that a hard skill, like how to actually use. And you guys also are serious about your CRM, which, by the way, that is another key skill and habit of trusted advisors. They have CRMs. They use CRMs. You know, they're building relationships at scale because of the way that they use their CRM and the way that they communicate at scale with people. But let's just say that's a hard skill. Like, you know, like it's, I don't want to say it's linear because it is dynamic, but it's, you know, click here, click there, learn this. And then there's super soft skills like the borrower conversation. You know, how do you break those up, and what are your coaching and training rhythms around that?
Yeah, I think Jason just mentioned the you know, the idea of role playing, or maybe Dave, you were saying the idea of role playing. And you know, you rewind life, and you know, you think about trying to ask a loan officer in 2020 or 2021, hey, can you carve out an hour so we can coach you and talk about role playing? No, I have 17 applications on my desk. I don't have time for it. But
running downhill market.
Exactly. But even, and this is something that I think is very, if you look at the realtor community, the good realtors embrace coaching. And, you know, they're all over social media about what they do, how they do everything. And you always see that they're being coached, they're rolling, they're going through all the scenarios. And I think that's a trait that you see in top loan officers as well. Hey, I'm good at this, but you're really good at it too. Tell me what you're doing. I'll tell you what I'm doing. Let's kind of bounce it off each other. Like iron sharpens iron. Can you find those that are good at what you do so that you can be good as well? And one of the things that I've always liked about Fulton is we're a good size. We're not, we're not massive in any of our markets. We don't compete against each other. We work together with each other to provide a strong brand to the market, and we help each other do things that are important to, you know, and help develop those skills so we can serve our communities. I think, Dave, one of the things that, is a very coachable piece today is your rates are too high, right? I mean, it's different than it has been in the past. So one of the areas that I see this come up a lot is we believe that one of our purposes is to change lives for the better. And one of our foundations as an organization is our fair and responsible banking strategies. And one of the pillars there is mortgage lending to serve the underserved communities. And, when you get into that CRA type product type market, a lot of education is needed. It's not rate payment. It's talking about the programs, the products, what's best for you, what's best for your family. Who else do we need to bring into this conversation? Dave, you might be buying a home, but do we want to bring in your parents, your spouse, your significant other? Are they part of your decision-making process? And then when it's time to provide you with all of that information, we're leveraging MortgageCoach to do that, to show the benefit of product A versus product B, or product A will work in this and product B will work in that case. So it's really about, how are you taking all of this, packaging it up and preparing and showing it to your buyer so that they can make an educated decision. And I think that's one of the biggest things is, sometimes, and this is what I was very guilty of in the beginning of my career, someone would tell me they want something and I know the answer is X, but you can't skip all the way forward to X. You need to help the borrower understand why X is the right answer and get them there with you. So that's kind of what, coaching, that's one of the things that we're working on now. How do you interact with borrowers? How are you showing borrowers where they need to go or where we think they need to go, and getting that buy-in from them on that process as well.
So I want everyone to watch this, and even if you have to stop, if you're watching the recording, and stop the recording, and because I want you to be able to turn this into action. And I think Brian just nailed something that, like, every branch manager, every regional leader, every head of production, should be like, what are the 2 or 3 biggest challenges my loan officers are having in the market right now? And there's a best practice way of doing it. And I want to make sure they know it. And when it comes to, what you said, how you're dealing with rate shoppers. I mean, I can just tell you, because I talk to enough C-level executives, I know enough loan officers, rate shopping is at an all-time high. Price exceptions are pretty much at an all-time high. Optimal Blue, that has 40% of loans in America going through the Optimal Blue network, says that the average price concession is 80 basis points. Guys, most lenders would love to have half of that in profit, like 40 basis points. And then here's the other deal. Not all lenders are, and by the way, that's per exception. So it's not saying price concessions are costing that. When I review the market, for the most part, they're anywhere from 20% for a company in concessions is low good. Anything above 30 is high. And I talk to companies all the time that are at 50 and 60 basis points in concessions. That's what they're going. And there's a best practice way of doing that. The other big one is creating urgency. Like how are you scripting to create urgency with consumers? So I would just push you for every, pause. What are the 3 things that we need to train on right now? Brian, what do you think the 3 things, like, rate shopping? Give us 2 other current market critical things that we should be training on.
Yeah, I think rate shopping is definitely the first. The other thing is nurturing a customer. In the beginning of my career, I don't have the stats behind this, but I would imagine that, you talk to a customer, they put in 1 or 2 offers and then get a house under contract. Now, due to inventory, that process is dragging out longer. So how do you stay in touch with your customer base as the sales cycle has elongated. And I think it's a blend of technology as well as a blend of personal skills. So, we're using MortgageCoach for that. We use Total Expert as our marketing operating system. So, you have your traditional CRM activities there, but more so it's about the connection with the individual, right? Actually making a phone call to talk to a person and say, Jason, how's it been going? I know you missed out on 123 Main Street, but how's the search been going? And then can you turn that into a sales opportunity? You pick up one nugget from Jason and you're connecting with Jason's realtor and say, hey, Jason gave me an update that you guys lost that one deal. Sorry to hear about it, but hey, he told me blah, 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 blah. And as a result, you're providing value to a referral partner, or a potential referral partner, or opening the door for a referral partner. So price shopping, nurturing of a relationship. And then, the last thing, and this is something that's always been important to me, is, knowing your craft, knowing what products, programs, eligibility are out there. How can you leverage those to benefit your customers and referral partners as much as possible? And, there are loan officers, even though we've seen a lot leave the industry, there are still a lot of loan officers that just don't possess the basics, I feel, to be able to serve their customer base. So if you are, a student of the game, if you are that trusted advisor who knows why to use product A versus product B, or why to suggest that, I think that gives you a massive leg up on your competition.
Yeah, agreed. And by the way, let's just focus on those two for the rest of this call. And I would tell every manager, like, turning pre-approvals into contracts, like, going from, hey, we're pre-approved till we're in escrow. That is a skill. Like, there are, trusted advisors like Sean Herrera in his market. He tracks that. And it's actually part of his pitch to realtors is, I measure and track, and I average about 26 days from referral from agent, pre-approved to under contract. And in his market, it's like 60 days. And, and he asked that when he talks to realtors, what's, on average, what's it taking to go from pre-approval to in escrow? And they're like, never thought of that. Let's start measuring that. And I'll help you improve that. Like, that's part of his value prop as an advisor, is I don't just pre-approve borrowers. I help them get under escrow in this market. Let me show you how I do it. Jason, any thoughts? I do want to do a little micro training on rate shopping before we run out of time, but any
No,
questions?
I think that's good. No, we can. Yeah. The only thing that I would add is one, what Brian said. First of all, anything that he just said about the rate shopping, what specifically to do about that, being coachable, using the technology, all those things. The only other two things that I would add from my perspective, my lens, is just making sure you're getting your reps in. Even right now, when you are walking uphill and it's hard, take that next step and then take that next step. Get yourself in front of realtors, pick up the phone, write those notes, be in front of people, like, get your reps in. And then the third thing, it may not sound like it's tactical, but it's so granularly tactical, is the self-care piece, like making sure that you're getting enough sleep, making sure that you're drinking enough water, your nutrition is good. Dave, I know you and I have talked about this before, like making sure you're working out, because when you are taking care of yourself, when you do show up and go over those tactical things and are attempting to do the things that Brian talked about, you're showing up as your best self if you've taken care, if you've done that proper self-care. So yeah, we can dive in. And what do you want to do, Dave? Do some role playing, or how do you want this to work, my friend?
Well, I want to give, because the rate shopping piece is such a big pain point. And like, I do believe it's one of those things where every branch manager watching this, every regional leader, if you're a loan officer, you can learn from this and you can share it with your manager. But if they just mastered this skill in this market, they would be killing like 5 birds with one stone. Like, literally, they'd have better conversion. They would lower exceptions. They would be teaching their loan officers how to be advisors in this market. So Brian, I'm going to share a couple of slides that I want to let them tell me either what I'm missing or kind of, let's almost make this so we could cut this and we could almost call this a little, how to win with rate shoppers in this market training, and everybody could just kind of go do their own version. And let's try to make this, I'll try to do my part in like 2 minutes. And then like you do 2 or 3 minutes. So we literally have a 5-minute, no more than 10-minute, lesson class. And Jason will have you be the coach and put it into coaching action. You cool?
Sure. Go for it.
So I'm going to go first, guys. And this is something that I train on all the time. So, it's one of the most common trainings I do right now. But the 3 essentials to optimize conversions and optimizing price concessions are, 1, giving options. And one of those options needs to be a future refi. Now, by the way, I talk to loan officers all the time that sometimes they, one of the options is a future refi, sometimes it's not. First of all, everything is about tailoring. You don't do the same exact thing with every customer. You tailor, you teach, and you lead. Now, if you get rate shopped, like if they're grinding you, you always show them the cost over 12 months. So, and the reason you do that, because negotiating with an 1/8 in rate or a 1/4 in rate or a 1/2 in rate costs basis points, and that's expensive. Like you're a lot better off negotiating with dollars. And that, by the way, that was my other point. So by the way, there's really only 3 steps, and there's, to put them visually, you don't do a fee worksheet. Like a fee worksheet is costing you at least 10 basis points, probably more, at least from a lot of the data we have, it's costing a lot more than 10 basis points, and you're not getting an optimized conversion. But when you give options, like sometimes it's 1 point, or 2 points, 1 point, no points, and then a refi option, what we find from a data perspective is that there's less of those negotiating price exception conversations. And then when you do have to negotiate a price concession, we have a lot of branch managers and regional leaders that are like requiring the loan officer, hey, did you convert it into dollars? What is the cost over 2 years? So when they say, oh, competition's a 1/2 point lower, I need an 1/8. Well, what's the cost over 2 years? Oh, you don't know that? Well, go find that out, because if I am going to give you a concession, I'm not going to give you basis points exception. I'm going to give you dollars. Like, oh, it's 4,000 over 2 years. Well, maybe I'm going to give you a $1,000 concession. I'm not going to give you an 1/8 or a basis point. So by the way, Brian, that's how I teach and trained on this. What would you add, or what would you do differently?
Well, I think one of the things that I would add to that, I think it's what you're sharing is spot on. I would add, the unfortunate truth is some rate shopper you're not win, and do your best, provide great service, but recognize sometimes you're just not going to win that and move on, because 1, it's an efficiency play. And 2, it's not going to move you to a mindset of negativity. So now, thankfully, that's the minority of things, not the majority. I really like how you're positioning it when you're looking for a PE. And we haven't mandated that to see a TCA, but the majority of our lenders are doing TCAs, so they'll share those. And what is really good is before you even get to this place, if you're in a position of being that trusted advisor, what I hear all the time from our team is, if we get close or if we can match, we get the benefit of this. So if you're putting in the work up front to build that relationship, you're going to get the benefit of the doubt. So all of that work up front leads you to the position of winning. And then the other piece, and I think it goes back to what we were talking about a little earlier, is knowing what you're doing, knowing your products, your programs. When can you use this over that will allow you to be a little more effective? Now, granted, they've changed a lot, but Fannie, Freddie adjusters, when I started my career, I almost had that memorized, and you know why you do a 70-20 versus 75-15. And hopefully people aren't auditing me because I'm just doing this off the top of my head here. But knowing where your pricing breaks are, why you do this, why you do that, and then showing your value to the customer to explain that to them. So I think that's what I would add to it. You know, the takeaway, and I hadn't really thought about it, Dave, is I like looking at things in terms of dollars, not basis points. You know, maybe as a leader, I'm looking at things in basis points because that's how we are measured. That's how we're always looking at things. But the consumer is looking at dollars. So that's something that I'm going to look to implement with our team.
Yeah. And by the way, guys, that's training. You know, like if you're going to go and do this, you're going to have to have a meeting or create a video, make sure people watch it. You know, we will have a version of this in our YouTube channel within a couple days to a week. And then you need to train them on it. And by the way, that doesn't mean you just have one training and it's done. You know, the way you train is you teach, you watch, you monitor, you come back, probably have to do another round of teaching, you do some role playing. You got to do that cycle a bunch of times. So, you know, Jason, I would love to know as a coach and a rewire, like if a branch manager, regional leader wanted to, you know, like I want to install this new habit organizationally, what would be the, you know, what would be your action plan as a coach and a trainer?
Your example of talking about dollars as opposed to rate and price is a perfect example of moving the cheese. One of the great mortgage bankers of all time, a guy named Joe Rogers, helped to run secondary for Wells Fargo and a bunch of other organizations. He would always take whatever conversation that the buyer was having with maybe you as a lender and a group of lenders as they're shopping, and move the cheese to a different conversation. And that's what you're talking about doing. Hey, instead of what's your rate, what's your price, let's talk about dollars. And he would do things in a rising rate environment like we're in now, is not only buy downs, which a lot of lenders are doing now, but really changing the buy downs. Like, I don't know if some of you lenders that are listening, it doesn't need to be a 2-1 buy down or a 3-2-1 buy down. There may be lenders out there that don't even know that they have the ability to do this. But what if you did a 2.5, 1 3/4, 3/4 buy down? You know, think about that. Like, you actually, there are some lenders out there that have the ability. It doesn't need to be in one, you know, interest rate increments. And so whether it's that or something else, moving the conversation is something that I think you can practice. And this goes back to what the three of us have talked about so far. Know your stuff, know your products, know what you can and can't do. Brian, you talked about it as well. And so what I would do if I'm a leader and I'm looking to help my group with this, is going, okay, we got to scour our products. We got to know exactly what we can and can't do. And then, like you said, Dave, let's not only teach our people, but let's teach them again. Let's remind, let's celebrate somebody that has a success around that. Let's do another training around it. You know, it's that constant drip of, not only are we going to change the conversation, but we're going to continually talk about changing the conversation. And then once everybody in the industry is on that conversation, like let's say people listen to you and all of a sudden they're talking about dollars over 12 months. And that's 6 months from now, and everybody in the industry is talking about that. Boom, we're going to go talk about something else now, because we're going to move the cheese yet again.
Yeah. Well, I what you just shared was awesome, because, you know, while I showed a slide that showed interest rate options with the future rate, in this market, more often than not, it's buy down options, you know, 2-1 buy down, 3-1 buy down, seller concession buy down, or MI options. And those are all things that you need to train on. And you can't just tell your loan officers to do it. You gotta make sure they know how to do these things in MortgageCoach. Brian, what would you say, you know, like I showed an example of interest rate options. What would you say are 2 of the 3 most common, let's just call it options, that would help win with rate shoppers in this market? What are the 2 or 3?
Yeah, I think the buy down is kind of one of the sexier things right now. What are those options? And actually sometimes I've actually sold against the idea of a buy down. So you can actually reverse the trend if you're a student of the game. If you're getting the information, I love the question, where are rates going to go? What are interest rates going to be? And you have to caveat and say, I don't know, but here's an educated guess. And that educated guess that I give is based on all of the information I take in every day from all of the different sources. So can you provide customers with the information on what you think things are going to do, which then affects what product is best for them, or you understand what their wants and desires are in the short, medium, and long term, and then you're crafting a solution that's best for them. So to me, I think that's really important in educating a consumer so that they understand what the long-term, short-term, and medium-term outlook of the market might be, because that would affect the particular product that you're going to use. The other one the buy down is one that's pretty attractive. The other one that we're seeing, or at least I'm seeing a lot, is working with a borrower's financial advisor on putting less money into a transaction. So, hey, I personally had a conversation with a customer last week where they're looking at a project, they were going to put 50% down, and they introduced me to their financial advisor to get documents. But I said, hey, this is what they're thinking of. Here's another solution that you might want to look at. Why don't the 3 of us talk about it and see what's best for your financial picture? And in that case, the collaborative conversation was, hey, why don't you put less into the transaction, leave more with the financial advisor so that it can grow? And Dave, what was really cool is in that exam, and this is, not a paid spokesman for MortgageCoach, but I had a TCA created because I thought I knew where the conversation was going to go. And I said, hey, what's a conservative outlook for the for values of your financial portfolio? Okay, use the TCA to show what the value of that portfolio would be. And I said, what's a fair? So I showed a conservative, a fair, and aggressive outlook on appreciation of their financial assets. And at the end, I think that the advisor wanted the money left in their hands because, to be honest, that's probably how they're making money. But at the end, the customer's like, this makes all the sense in the world. I'm only going to put 20% down. But it was that collaborative conversation, the 3 of us on a call, walking through it, me live, hitting buttons, things are changing. So it was that good kumbaya moment of, oh yeah, this is what we're going to do.
You also move the cheese. You see see what he did there, Dave? He moved the cheese from his competitors are not having those conversations that he just described that he had. And he created trust by relationships, taking the time to talk with the financial advisor and the person together, and using technology such as yours. So it's a combination of all those things that creates a trusted advisor.
Yeah. And guys, here's the follow-up to train on that, because this is what I've been doing for 2 months. It's called the MortgageCoach 10X training. And what you would do is you take what Brian just said, that's a story. And you'd start it with, let me tell you a story, and then break down. And in this story, we got a planner, we helped a buyer. To Jason's point, we created differentiation. And then you have a loan, the loan officer's on the call. In this case, it's Brian. So he's telling the story, he's doing some script training, and then there's a total cost analysis involved. So you have someone who could train on that. Now, Brian's created thousands of them, so he could probably conduct both the sales training, the story, and the hard skills to do it. One of the things that we did with this 10X training is I had like top producing producers on it, and I had one of my trainers on it, and we taught, reduce rate shopping, win with builders, how Daniel's closing over I actually should change that to 370 loans this year. And then all you managers listen to this, make sure that you have training. There's follow-up, there's follow-up coaching, there's online training tools. So I know we're running out of time here, guys. And Jason, I want you to wrap it up as a coach, because we've been talking for 45 minutes here. If let's just say we were doing this live for all your coaches, I'll bet you I always kind of close out with, hey, here's the action plan. Why don't you kind of wrap this up with a Rewire, coaching action plan for anyone that tuned in today?
Yeah, I mean, I think how I might end it is how we end all things. In order to get the results that we're looking for, we need to take action. And the actions, that's what we've been talking about for the last 45 minutes. All of that's above the waterline if you think of an iceberg. But below the waterline are thoughts, our emotions. It's the homework. It's the late night homework. It's all those things that we talked about that support the actions. And so if you're listening to this, you're like, that's a good idea, or that's a good idea, and I'm not really sure. And man, Brian's story about, the buy downs or the total cost analysis, what I would beg you to do is pick one or two things and create a written plan to take action on it, because nothing happens until somebody takes action. So if you're watching this and you heard 5 or 6 different ideas, just pick one or two, take some action on those. Then once you get a few notches on your belt there, then you can go to the next action and the next action. So yeah, just take action, no matter how small it might seem. Take some sort of action on something that you heard today.
And Brian, as someone who has, built a culture of trusted advisor, any closing thoughts that you have?
No, I think, it's really about the people who you work with and organization that you're aligned with. And it's a collaborative effort. And when I say people you work with, those are not only your colleagues at your employer, bank, mortgage company, whatever the case may be, but your industry contacts. And we're all in this together. We're all trying to get to the same place, and just understanding what each individual wants and how can you relate to them and how can you give them value. And as a leader, what are your shared goals? What do you want to accomplish? And do those accomplishments support their personal goals as well as the organization's goals? And when we can align all of that, we're in a really good spot.
Well, hey, bro, I am looking forward to our next interview with Pat Casey and just telling his story of how he has so rapidly become one of America's best trusted advisors. James, if anybody wanted to learn more about Rewire, they want to, learn about getting coached by your organization, what would you tell them to do?
Well, I love the fact that you keep on calling me James. That's my brother's name. And I don't know. My brother's a pretty cool guy, but I'm cooler. No, I'm
I don't know why. I know I did
I'm just giving you heck because it's fun to give you heck about it. So
I know. I was trying to think, because I knew I did it once. I did a panel yesterday and I had James Heck on it. I was like, why am I keeping doing this? But yeah, sorry.
No. All good. I'm just giving you a hard time because it's fun to give you a hard time. Where can you find, rewireinc.com, rewireinc.com, and any of the socials, at Rewire Jason. And so whether that's LinkedIn or Instagram or Facebook, at Rewire Jason. And we'd love to help you. On our website, we have all kinds of free tools. Obviously, we'd love to coach you or your organization, but we have all kinds of stuff on there, and happy to help in any way that we can. Thanks for having me today, Dave.
Yeah, they've also got a great podcast. Highly recommend it. I've been interviewed twice, I think, but they interview a lot of folks. I mean, go through it. If there's anyone that you see that they're interviewing, you want to, you're interested in that person, it will be a different conversation. Like, it's just because that person's been on a podcast, it's different. What they're doing is different. And again, they're helping folks rewire their mind so that they're being their best self, whatever that is. Hey, thank you, both of you. I really appreciate your time, and hopefully everyone watching got value. Take care, everybody.
Good to see you, Brian. Thanks, Dave.
Dave.